Welcome back, everyone. I got two different questions from you guys this week. One was, Simon, is Ferrari the best company to buy still, now that EV is happening and AI is happening? And the second was, even if it's the best company to buy, is right now the price overvalued or undervalued? So let's go. We want to answer these two questions in a quick video. So let's jump in. We will use our usual framework. What's it for? Who is it for? Is it profitable? Is it growing fast enough? We want ROIC and growth above 15%, which is extreme. If you can do that, you're unstoppable. And there are very few companies on the planet that can pass that screener. Is it defendable? What are the risks? What are the opportunities? What's the investment thesis? And what is the current valuation? So is it a buy right now? And Simon, do you hold it? Did you buy it? Everybody knows that I hold it, but did I buy more of it? So use case, that's an easy slide because everybody knows what the use case of Ferrari is. You have 70 years of racing history, iconic, and everybody wants to have that also on the street. So there are also street cars, and the new models are coming out as we speak. People don't like so much the EV version, but they like the Puro Sangue, and they like the newest Ferrari cars pretty well. The wait list is still full. So let's look at profitability. Is Ferrari profitable? It is, because ROIC is 30%. We want it to be above 15%. And if you compare gross margins of the peers that are building cars, an average gross margin of all the car manufacturers is 15 to 20%. Ferrari is incredible, 52%. Even the bottom line of Ferrari is higher than the top line of some of those. We're not even comparing apples to apples here, right? It's the same industry, but it's a complete different business model. And this is what pricing power does for you. That's why I hold these pricing power workshops every few months, because pricing power can set you apart from your competitors. And in this example, you see why. If you have pricing power, then you can increase margins. If you increase margins, you can reinvest into the business. If you reinvest into the business, you can compound over time. If you compound over time, there is no way your peers can catch up with you if they don't have the same reinvestment rate. So we have been buying Ferrari years ago, and we told Sprint Club members the exact hour that we were buying. So make sure you are in the Sprint Club. Join at strategysprints.com. It's free for 7 days. Just hang out with us, see the quality of the people, quality of the material, and then you can decide if it's good for you. Is it growing above 15%? This is the only metric that Ferrari did not win in our analysis. So it's growing at 13%, and it's flattish. But I would accept any growth between 8% and 15% for Ferrari, for the reasons that we've shown above. The profitability is like a software company. The defendability, we will see in a second, is strong. So in this case, yes, it's growing below 15%, but it can do so for 2 to 3 decades from here. And it has shown that it can do that. So in this case, I accept that metric not being hit because of all the other moats that it has. Let's look at the other moats. We have our favorite moat is network effect. Yes, we have strong network effects because you have the owners. The owners are in their own events, in their own bubble, in their own circles. They meet each other. There's a collector community around the owner community. There's a multi-year waiting list to create even more FOMO. There is the Formula One halo effect that drives the brand awareness globally. So even if you stop marketing Ferrari, there is still the marketing of the Formula One. There is still Lewis Hamilton in the news. You see the network effects here. That's a 10 out of 10. Loyalty, yes. Those high net worth customers, they buy a Ferrari. If you go into a shop, let's say you are in Miami, and you go into a Ferrari shop, you will see people that order their first Ferrari and then a few months later order their second Ferrari because they know that 2 years later they sell their first Ferrari for 10-12% more than they bought it, and they buy the next one. So it's a collector product. It's a limited product. It's a high quality product. And think of Rolex, etc. These are collectors' items. So once you own a Ferrari, switching to Lamborghini, McLaren means losing access to that community, to those events, to priority for new models in the waiting list, and the prestige within the community. Do we have IP? There is some racing IP. I wouldn't say that's super strong in terms of defendability, but there is some racing IP, obviously. There is brand and exclusivity, and there is this self-imposed supply constraints, which is capped at 13,000, 14,000 cars. They don't create more than that, which again creates those pricing power and network effects, because when you have steady demand or even increasing demand, but even if it's steady and you cap the supply, now you are creating pricing power. And that's exactly what we want, and that's exactly what Benedetto Vigna and Ferrari are doing. Strengths of Ferrari: the brand, which has a moat, which has artificial scarcity, which has 70 years of racing, which has 52% gross margins, and full waiting lists, so full pipeline. Weaknesses, well, it's also the volume limitation is also weakness. There is a dangerous dependence on high net worth individuals. What if something happens to that category? And there is EV transition risks, because they didn't like the first Ferrari EVs so far. But Benedetto is on it, and he says, well, it's also an opportunity. We'll show them that the electric Ferraris are as fun. Benedetto is right now riding an electric Ferrari and is showing people that it's actually fun and it's a great car. So the weakness is also an opportunity. There are many more opportunities. There are threats from, of course, EV coming in, economic downturns coming in. And those are things that we have to watch for. What is the thesis? Thesis in one sentence. That's how we like to play it in the Sprint Club. If we understand something, we can say it in one sentence. So the investment thesis is Ferrari is a luxury brand moat with capped production, which generates ultimate pricing power, driving 52% gross margins over the 15 to 20% that their peers are doing. And that's why they are leading, and they can continue leading for decades. So even if they're not growing that fast, they can be a steady compounder in a compounding portfolio. That's why they are in my compounding portfolio, and I bought them at the right price. Right now, our DCF model says it's worth $433. It is at $489 as of July 2025. And that means right now it's overvalued. I wouldn't buy it right now, but I bought it a few months ago at the right moment. And when I bought it, I immediately shared that buy in the Sprint Club. So make sure that you are in the Sprint Club so that you get the real-time alerts as they're warm and not weeks later or months later when they're cold. So join the Sprint Club at strategysprints.com. See you on the other side. Keep rolling, everyone.